Hey guys, welcome back to the channel. In today's video, we're diving into a fresh interview from none other than Tom Lee. You know, the legendary Wall Street strategist and co-founder of Fundstrat Capital. He just went on CNBC's Squawk Box and dropped some interesting insights about the current market, Bitcoin's next move, the lingering effects of Trump's tariff policies, and even the tension between Trump and Fed Chair Jerome Powell. According to Tom, we might actually be past what he calls peak uncertainty, but don't get too comfortable. He also says we're not out of the woods when it comes to maximum pain. Yeah, we'll get into all of that. First, I'm going to play the clip so you can hear exactly what Tom Lee had to say. Then I'll break it down with my full reaction and give you my take on what this all really means for investors like us. And stick around till the end, because I'll also be revealing 2 cheap stocks to buy, now that I think have massive upside potential to make you rich. Ones you'll want on your radar before the rest of the market catches on. These are companies that are at the forefront of innovation and industry leadership. We're talking about a leader in healthcare, a pioneer in communication and entertainment, a giant in their respective industries. And the craziest part? Wall Street is sleeping on them. They're practically giving these stocks away right now. I'm going to break down exactly why these companies are so undervalued and show you how you can capitalize on this once-in-a-lifetime opportunity. So if you're serious about building wealth and making smart investment decisions, you're going to want to watch this all the way through. Make sure to smash that like button. Let's aim for 1,000 likes on this video. And drop a comment below with your thoughts. And if you're new here, hit that subscribe button and turn on notifications so you never miss out on key market insights like this. Alright, let's roll the clip and hear what Tom Lee has to say.
Let's bring in Tom Lee, Head of Research at Fundstrat, Chief Investment Officer at Fundstrat Capital, as well as a CNBC contributor. And I don't remember whether it was you or Pump when we were talking about Bitcoin sort of stuck under 85,000 with gold going up every day. And it was either you or Pump that said Bitcoin usually follows a couple of months later, but has a much bigger move.
That was probably Pump.
Probably, yeah. He's pretty bullish.
Yes.
Have you noticed anything similar to that? I mean, that's a pretty big move. And, you know, in the past, gold's been leaving in the past near term, 2 months, 3 months, whatever, this year maybe. We have seen gold leave Bitcoin in the dust and go to new highs. Looks like it'll do 4,000 easily, right? Do you think Bitcoin eventually catches some of the same money, the same bid?
Yeah, I think Bitcoin earlier this year may have been struggling with some of the deleveraging that was happening for institutional investors.
Just selling what they could.
Yeah, selling what they could, and I think that suppressed Bitcoin, especially over weekends. But now that deleveraging is done, I think that Bitcoin is going to catch up to gold. And, you know, Bitcoin's old high was over 110,000. So I think there is a lot of room to catch up as a sort of non-dollar asset.
As for the equity markets, you think stocks are attractive, but uncertainty is still the name of the game, and it's going to persist. You think the high in the VIX, what did you say that was on April 7th, that holds?
Yeah, I think it's going to be hard to match that level of fear again. So I think we're probably past peak uncertainty. I mean, even with this Fed controversy, but I don't know if we're past maximum pain. You know, I think that there's still risk that the economic consequences are going to cause markets to be hesitant, but it's going to be hard to match that fear again. So I think a structural low did take place.
So I don't know if I really think it's going to be hard to match. I could get a lot more. People were pretty fearful. Yeah. But you don't think this is going to be the absolute washout that some people are thinking, something similar to past breaks that were really significant. So let me ask you this then, just specifically, does the S&P have a closing bear market low from here? What are we down? 14% now, something like that.
Yeah, I mean, 4,800 was the low we made a couple weeks ago.
Yeah,
and I think that there's a chance we could be drifting dangerously close to that again in the next couple of weeks, because there's still probably a lot of investors sitting on their hands and there's uncertainty. But on the flip side, I just think that we have to keep in mind that, one, companies are very resilient, and we'll learn about it during earnings season. But we could have a positive policy shock as well.
There is apparently...
What does that mean? Like a backing off of some of the tariffs?
Yes, we could have something that the market sees as a win. Whether it's going to be one of the 15 countries that we have a trade deal with, or a de-escalation with China, which, of course, overnight didn't seem like that was a possibility. But There is room for a positive policy shock.
Apparently, there's still another place where they trade stocks. Have I got that right? The New York Stock Exchange? Are you ringing the bell there?
Yes, our company is ringing the bell this morning at 9:30.
At the New York Stock Exchange. We admit that we like them. But you're ringing because one of your ETFs has reached $1 billion, and it's called the Granny Shot ETF.
Granny shots.
You guys know what a granny shot is?
Yeah, where you shoot from underneath for the basket.
Exactly. You can put more backspin, I guess, on that. And I
there
guess
was a pro who did
Rick
that very
Barry.
well.
Rick Barry.
Yeah.
And they can get like 95%.
Yeah, NBA Hall of Famer, one of the best free throwers of all time.
Yes. So your granny shots are stocks that don't go down or impossible to go down?
Well, they do go down, but they're linked to the most important themes. So our idea is we identify like the most important themes that will last for 10 years, whether it's AI or cybersecurity or millennial structural things like that. But we find stocks that are strongest correlated to multiple themes. So it's a granny shot because you have more opportunities for that stock to work.
So, right off the bat, the host points out that gold has been powering to new highs, making a run at $4,000 per ounce, while Bitcoin has been stuck under $85,000. And Tom Lee's take? He thinks Bitcoin's underperformance this year was largely due to institutional deleveraging. In plain English, big funds were forced to sell crypto positions to reduce risk, especially over slow weekend trading. Now that the worst of that is past, Lee believes Bitcoin is poised for a big catch-up move. He reminds us that Bitcoin's all-time high was above $110,000, suggesting there's room to run if money flows back into non-dollar assets. It makes sense. Whenever markets deleverage, risk assets suffer. But if institutional demand re-emerges, Bitcoin could indeed play catch-up to gold's run. Keep an eye on Bitcoin's weekend trading volumes as a telltale signal for renewed institutional appetite. Next up, the host asks whether we've seen peak uncertainty in stock markets, specifically referring to the VIX spike on April 7th. Lee argues that matching that level of fear again will be tough, implying we may have passed peak panic. However, he tempers that optimism by reminding us there are still potential economic landmines ahead, everything from sticky inflation to geopolitical flare-ups. We might be past the worst of the immediate shock, but uncertainty is the name of the game. If you're holding equities, be prepared for continued chop, especially if earnings season delivers any surprises or if Fed rhetoric shifts dramatically. When pressed on whether the S&P 500 could revisit its recent bear market lows, around 4,800, Lee acknowledges that it's a realistic possibility over the next few weeks. He notes that investor inertia and lingering uncertainty could push us dangerously close to those levels again. But, and here's the silver lining, he highlights corporate resilience and the potential for a positive policy shock, like a de-escalation in US-China trade tensions or a new trade deal that re-energizes markets. This is classic risk management advice. Brace for a pullback, but don't lose sight of the catalysts that could spark a sharp rally. If you're a tactical investor, consider setting buy orders near recent lows, with tight stops in case uncertainty lingers. Lee's point about corporate resilience is well taken. Many U.S. companies have fortress balance sheets and pricing power, which should allow them to weather near-term headwinds. And if policymakers surprise us with tariff rollbacks or fresh trade pacts, that could ignite a fresh wave of buying. Remember, markets love good surprises. Earnings season will be the next major inflection point. If companies can demonstrate margin stability and revenue growth despite higher rates, that could be the cue for a broad market rally, regardless of Fed policy posture. Now, this was the fun part. Fundstrat rang the bell at the New York Stock Exchange to celebrate their thematic ETF hitting $1 billion in assets under management. And they cheekily call it their Granny Shot ETF, a nod to the underhanded free throw style made famous by NBA Hall of Famer Rick Barry. The idea? Just like a granny shot in basketball, these ETFs aim for steady, reliable performance by focusing on stocks that don't go down, or at least those tied to long-term structural themes. Think cybersecurity, demographic shifts like millennials, etc. The branding is clever, but the strategy has real merit. By zeroing in on stocks that overlap multiple durable themes, you get built-in diversification and a smoother ride. That said, stocks that don't go down is a marketing phrase. Everything has downside risk if sentiment shifts. Always vet the underlying holdings and correlations yourself. Overall, Tom Lee's interview underscores a balanced view. Recognize the headwinds, deleveraging, Fed uncertainty, potential economic slowdowns, but also stay alert for major catalysts that could swing sentiment in your favor. Whether you're a Bitcoin bull, an equity strategist, or a thematic ETF enthusiast, the core lesson is risk management and staying nimble. Now let's check out the 2 cheap stocks to buy now, with the potential to make you rich. First up, we've got a company that needs no introduction, Pfizer, ticker symbol PFE. This is a name that's been around for over 170 years, and it's not just a staple in the pharmaceutical industry, it's a household name. When you think of innovation, resilience, and global impact in healthcare, Pfizer is right at the top of the list. From humble beginnings in Brooklyn, New York, to becoming a global powerhouse, Pfizer's journey is nothing short of legendary. You know them, you love them, and let's be honest, they probably saved your grandma's life at some point. Whether it was a life-saving antibiotic, a vaccine, or a breakthrough treatment, Pfizer has touched millions of lives across generations. Their medicines are in hospitals, clinics, and pharmacies all over the world, quietly working behind the scenes to keep families together and give people hope. Think about it. How many companies can you name that have had such a direct positive impact on the health and well-being of people you know and love? But here's the thing. Wall Street is acting like Pfizer is yesterday's news. The so-called smart money is treating this company like it's past its prime, like it's just coasting on old glories. Analysts are looking at the latest headlines, the quarterly numbers, and they're missing the forest for the trees. It's almost as if they've forgotten what made Pfizer great in the first place. They're stuck in the past, man. They're obsessing over Pfizer's price-to-earnings ratio, wringing their hands because it looks too low. Oh no, the PE is down. The company must be dying. Give me a break. This is classic short-term thinking. They see a dip in earnings after the COVID vaccine boom, and suddenly it's all doom and gloom. But that's not how you build wealth in the stock market. You have to look deeper. Let's get real. Pfizer is a cash-generating machine. Year after year, they're raking in billions of dollars in revenue. Even after the pandemic surge, their core business is rock solid. They've got a fortress balance sheet with more than enough cash to weather any storm. And it's not just about the numbers on a spreadsheet. This is a company with the financial firepower to invest in research, make strategic acquisitions, and reward shareholders. And let's talk about what they're doing with all that cash. Not only are they paying a healthy dividend, one of the best in the industry by the way, but they're also aggressively buying back their own stock. Every time Pfizer repurchases shares, it's like they're giving a gift to the remaining shareholders. Fewer shares on the market means each one is worth more. It's a classic move for companies that believe in their own future, and Pfizer is putting their money where their mouth is. And you know what they're doing with all that cash? They're buying back their own stock hand over fist. That's right, they're literally taking shares off the market, which drives up the price. This isn't just financial engineering, it's a sign of confidence. When a company as established as Pfizer is buying back shares, it's because they see value that the market is missing. They know their business better than anyone, and they're betting big on themselves. But here's where it gets really exciting. Pfizer isn't just sitting on its hands counting cash. They have a research and development pipeline that's absolutely bursting with potential. We're talking about dozens of new drugs and treatments in the works, targeting everything from rare diseases to chronic conditions that affect millions. Their scientists are pushing the boundaries of what's possible, working on therapies that could redefine modern medicine. They're on the cutting edge of cancer research, developing new vaccines for everything under the sun, and even working on gene therapies that could change the world. Imagine a future where diseases that were once a death sentence are now manageable, or even curable, thanks to Pfizer's innovations. This isn't science fiction, it's happening right now in their labs. And let's not forget, Pfizer's global reach means their breakthroughs don't just stay in the lab, they get delivered to patients in every corner of the world. From North America to Asia, from Europe to Africa, Pfizer's medicines are making a difference on a massive scale. Their partnerships with governments, NGOs, and other companies ensure that life-saving treatments reach those who need them most. Pfizer currently holds a market cap of about $124.7 billion, and in 2024, it pulled in $63.63 billion in revenue, with $8.03 billion in net income. Earnings per share sit at $1.41, and it's trading at a PE ratio of 15.53. Not too high, not too low, but definitely interesting for long-term investors. But what really makes Pfizer stand out right now is the dividend yield, a solid 7.69%, which is massive for a blue-chip stock of this size. Even more striking, its current price of $21.97 is a whopping 164% below its fair value estimate of $58.01. That kind of gap between price and value is rare in a stock this big and established. This is the future of medicine, people, and Pfizer is leading the charge. So why is Wall Street so down on Pfizer? It's baffling, honestly. The market is so caught up in the latest headlines and quarterly reports that they're missing the bigger story. Pfizer is investing in the future, building a foundation for decades of growth, and yet the stock is trading like it's stuck in the past. It's simple, they're short-sighted. They're so focused on the next quarter's earnings that they're missing the big picture. They see a temporary dip in profits and panic instead of recognizing the long-term value that's being created right now. This is classic market myopia, and it's exactly the kind of mistake that creates opportunities for smart investors. They don't see the long-term growth potential of this company, but you know who does see it? Us. We're not afraid to be greedy when others are fearful. We know that real wealth is built by buying great companies when they're out of favor, holding on through the noise and letting time do the heavy lifting. We're looking at the fundamentals, the pipeline, the global reach, and the financial strength. We see a company that's not just surviving, but thriving. One that's positioned to deliver value for years to come. While everyone else is running for the exits, we're stepping in and scooping up shares at a bargain. We're buying Pfizer while it's cheap, and we're going to ride this wave all the way to the bank. I'm talking life-changing gains here, people. This isn't just about making a quick buck. It's about building a portfolio that can stand the test of time. Pfizer's combination of stability, innovation, and shareholder rewards is a rare find in today's market. Remember, this is a company that's weathered wars, recessions, and technological revolutions. They've adapted, evolved, and come out stronger every time. When you invest in Pfizer, you're not just buying a stock, you're buying a piece of history and a stake in the future of healthcare. This is your chance to get in on the ground floor of something truly special. Don't let this opportunity pass you by. The market won't stay blind forever. Sooner or later, the world will wake up to Pfizer's true value. And when that happens, you'll be glad you got in early. So do your research, trust your instincts, and remember, fortune favors the bold. Alright, for our next stock pick, we're diving into the world of entertainment, a space that's constantly evolving and shaping the way we live, work, and play. We're talking about Comcast, ticker symbol CMCSA, the powerhouse behind Xfinity, NBC Universal, and a whole lot more. Comcast is a name you might recognize from your cable bill, but what you might not realize is just how massive and diversified this company has become. From high-speed internet to blockbuster movies, from theme parks to streaming services, Comcast has its hands in almost every corner of the entertainment and communications world. Now, I know what you're thinking. Comcast, isn't that the cable company everyone loves to hate? Listen, I get it. We've all been there, dealing with long hold times or confusing bills. But here's the thing. While the old image of Comcast might still linger in some people's minds, the reality is that this company has undergone a massive transformation. They're not just a cable provider anymore. In fact, cable is becoming a smaller and smaller part of their business as they pivot to new high-growth areas. But here's the thing. Comcast is so much more than just cable these days. They're a media and technology giant, and they're absolutely crushing it. Their reach extends far beyond your living room. Comcast is investing heavily in cutting-edge technology, building out one of the fastest and most reliable broadband networks in the country, and leveraging their massive infrastructure to deliver everything from streaming video to smart home solutions. Their workforce is filled with innovators, engineers, and creative minds who are constantly pushing the envelope. Think about it. They own some of the most popular cable channels in the world, they've got a massive streaming service in Peacock, they're a major player in theme parks, and they're even getting into the mobile phone game. Peacock is quickly becoming a household name, offering everything from hit TV shows and movies to live sports and exclusive originals. Universal Studios theme parks are drawing crowds from around the globe, creating unforgettable experiences for families and fans. And with Xfinity Mobile, Comcast is tapping into the booming wireless market, bundling services and offering customers more value than ever before. Comcast is everywhere, and they're only getting bigger. They're like the Thanos of the entertainment industry, but instead of collecting Infinity Stones, they're collecting subscribers and revenue streams. Whether you're streaming a movie, checking your email, or riding a roller coaster, there's a good chance Comcast is playing a role in your experience. Their network covers millions of homes and businesses, and their content reaches audiences across every platform imaginable. They're not just keeping up with the digital age, they're helping to define it. And the best part? Their stock is ridiculously undervalued. It's like Wall Street is stuck in the 90s, thinking Comcast is just a boring old cable company. They're missing the boat, big time. Analysts are starting to wake up to the fact that Comcast's diverse business model, strong cash flow, and relentless innovation make it a hidden gem in today's market. While other media companies are struggling to adapt, Comcast is thriving, and savvy investors are starting to take notice. Comcast is a growth machine. Their streaming service is gaining subscribers like crazy, their theme parks are packed, and their broadband business is still going strong. Just look at the numbers. Peacock has added millions of new users in record time, Universal Studios is breaking attendance records, and Xfinity Internet is the backbone of countless homes and businesses. Even as the world changes, Comcast keeps finding new ways to grow, adapt, and stay ahead of the curve. Comcast is currently sitting on a $125.82 billion market cap, and unlike many legacy media companies, it's still pumping out strong numbers. In 2024, It brought in $123.73 billion in revenue, generating a healthy $16.19 billion in net income. That translates to earnings per share of $4.16, and it's trading at a P/E ratio of just 8.03, extremely low for a company of this scale, suggesting it might be heavily undervalued by the market right now. And while its dividend yield isn't quite as high as Pfizer's, 3.77% is still very respectable, especially when you consider the long-term growth potential in both its broadband and content divisions. They're firing on all cylinders, and their stock price is about to explode. This is your chance to get in on the action before it's too late. With so many growth drivers, streaming, broadband, wireless, theme parks, and more, Comcast is positioned for long-term success. The market hasn't fully priced in their potential yet, which means there's still time for smart investors to jump on board and ride the wave. Comcast is a long-term winner, and their stock is a steal at these prices. Don't miss out on this incredible opportunity. Whether you're a seasoned investor or just getting started, adding Comcast to your portfolio could be one of the smartest moves you make this year. The future of entertainment is here, and Comcast is leading the way, so why not be a part of it? With their unmatched scale, innovative spirit, and commitment to delivering value to customers and shareholders alike, Comcast is set to shape the next era of media and technology. Get in now and watch your investment grow as Comcast continues to redefine what it means to entertain, connect, and inspire. Boom! There you have it, two incredible companies with massive potential just waiting to be unlocked. Whether you're a seasoned investor or just starting out on your financial journey, opportunities like these don't come around every day. The stock market is full of surprises, and sometimes all it takes is a little bit of research and the right timing to get in on the next big thing. Imagine being able to look back a few years from now and say, I was there at the beginning, I saw the potential, and I took action. That's the kind of story every investor dreams of telling. Remember, these are just two of the many amazing investment opportunities out there. The world of investing is vast and constantly evolving, with new companies, technologies, and trends emerging all the time. It's important to keep your eyes open and your mind sharp, because you never know when the next big winner will appear on your radar. Diversifying your portfolio and staying curious can help you discover hidden gems that others might overlook. Do your own research, stay informed, and never be afraid to invest in your future. The most successful investors are those who take the time to understand the companies they invest in, who read up on the latest news, and who aren't afraid to ask questions or seek advice. Remember, investing isn't just about making money, it's about building a secure future for yourself and your loved ones. Every bit of knowledge you gain, every lesson you learn, brings you one step closer to financial freedom. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, you're in the right place. Our community is dedicated to helping investors like you make smarter decisions, avoid common pitfalls, and stay ahead of the curve. Join the Stocks Galore Patreon today and take your investing game to the next level. By becoming a member, you'll gain access to exclusive content that you won't find anywhere else. Think deep dives into promising stocks, step-by-step guides for building your portfolio, and direct access to our team for personalized advice. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Don't wait until the next big opportunity passes you by. Take control of your financial future today. Link is in the description. Remember, the sooner you start, the sooner you can begin building wealth and achieving your financial goals. What do you think about Pfizer and Comcast? Are these companies on your watch list? Let me know in the comments down below. I read every single comment and love hearing from you all. And don't forget to smash that like button, subscribe to the channel for more awesome stock market content, and share this video with your friends who might be interested in investing, and hit that notification bell so you never miss an upload. With the market moving fast and new opportunities popping up all the time, you'll want to stay up to date with the latest tips, analysis, and stock picks. Thanks for watching, and I'll see you in the next video. Happy investing!